All right, Bitcoin Monday, Cinco de Mayo. Let's get to it. We had a weekly close. We're going to get to that in a minute, but let's start off here on the daily. We're at just above 94K right now. Hesitation in our green zone as really expected. That was the odds, right? Because we spent so much time, and on the higher time frames like the 3-day, the weekly, this is much more defined, this area. So pausing after a 30% move, that's what you would really want to remain healthy. So to remain healthy and continue our uptrend, anywhere north of this yellow zone is A-OK. That's around 88K, 88,000. Now, day over day, we can watch these closes and do these updates. But if we start to close under the 14 EMA here, the purple line, then you want to look for the next one. The EMA 21 is a bigger one. And not only is that the bigger moving average and kind of my spot that I'll be looking at right now, just because we got a pretty decent close under the EMA 8 yesterday. We also have some swing lows here from locally, but look at all the price action back here. So between our super bullish green zone and our cautionary yellow zone, do we have another potential like yellow area we could kind of look for support, or a gray zone? I'm glad you asked. Well, let's go look at like some local highs here. Sometimes when you're looking at, you kind of to get a zone, it's best to just put it on closing prices and see if you can like see some lows. Okay, we got a couple there. Got some little highs here, so something with like some highs and some lows, and maybe you can get a good moving average in there. And coincidentally, you see our 21 EMA, EMA 14 at the bottom, excuse me, our 34, our 14 is the purple one, right? So we have a lot of interaction in here. So I would not really consider this bullish or bearish, right? Like we could maybe paint that a different color. Gray doesn't really work out very well, but we can do that for now. This is our, hopefully you can still see that, our gray area. And if we start to come below this, right, then we'd be closing obviously under the 21 EMA. We'd be closing under the 34 EMA. We'd be getting these bigger moving averages. You see our 200 here, our 100 in the blue, our 50 in the green. Those are some big ones. And then we start to see, or we get real close to our caution zone, which we're still not bearish here, but we're no longer bullish either, right? We're like, we need to pay attention, because if you start to close back under the 200, okay, then we have some issues. But that's really not the odds, right? A 30% move right into our green bullish retest of our green zone, where we could really blast off big time if we get up here. And keep in mind, like, that could still happen very, very soon. This week, still possible. But with that EMA 8 close and our basically we just teleported 30% higher. So I think the odds are maybe a couple of weeks of chill. We're not ready for chill. I get it, right? But the facts are the facts, right? It's probably going to be a couple of weeks because we just went here pretty quickly. So having said that, we'll keep our zones on, right? These aren't going to change. And, we're much more bearish if we get back to this red zone. But we need to start being caution at our yellow. But until then, we're bullish neutral. Let's go with that. New phrase of the day. Bullish, right? We hit our green. So bullish by definition here. We're above most moving averages, especially on the higher time frame. Still looks good. And we're still above our newly proclaimed gray zone. Anywhere in here, we could bounce back quickly. Okay, so let's keep these zones on and move out a little bit. Oh, I do want to point out a couple of other things that we have here that have just updated. Look at our Gaussian channel. Just over the weekend has turned green. We have price action on top here. Okay, so note also that top of that green Gaussian channel zone is at 90K and in our gray zone, and all these lower wicks, right? Low wicks, high wicks, worth noting. Okay, what else do we have? How about one more thing, right? Because our golden cross, death cross, right? Typically, more oftentimes than not, when you have a death cross, you get a rally. Did we get that? Almost like within hours, right? Seemingly. We had our low and we started rallying. And then what do you think happens at a golden cross typically? Exactly the opposite. you start to fall. Well, look what's coming up here, right? In the next 2 weeks, we could get close at least to a golden cross. If price action stays above 90K, above this yellow zone, we're going to get it sooner than later, sometime in May. This could be the start of the downfall towards the golden cross, right? Typically, this is going to cross faster, obviously, the higher prices we hang out at. So if we come down here and hang out at 92 or higher and bounce back up here, right, this could cross in the next couple of weeks. But just wanted to point that out, that death crosses, they're always like counterintuitive, right? You think death cross bad, right? You usually get a rally. Golden cross, good. You usually get a fall, right? So maybe we're starting to see potential of that on the horizon. Doesn't mean we have to get a golden cross, right? Obviously, if prices are at 85K in 2 weeks, we're not going to get the cross. You gotta have to stay above this moving average to get said golden cross. Okay. All right. Just wanted to point that out. Let's get to our zoomed out a little bit more. We'll get our moving averages back on here, our regular ones. All right, here we go. And now we start to see a little bit more clear of zone levels here, right? Our green zone, right? We would have taken out this high. Not typically going to happen on your first attempt, especially after just an immediate straight move up, right? 30% higher, almost about as quick as you can do it. Come down, who cares, right? We're still well above the EMA 8, so now's not the time to be panicking, right? If you're worried about bear market, right, this is where you worry about bear market, down here in the red zone, under 80K again. Okay, then you can worry, but not at 94K after you just knocked on the door of 100K again, right? We got almost to 100K again, 98. Take out this high, then we're good to go. But like we said, like, we don't want to just do this, right? That's not healthy. Then we get worried for end of cycle if we were to just kind of cut through here, right? This is already a little bit unsustainable, but going right to here, perfect. Now let's get a move back down to the EMA 8 or the 21. Like, why would this be worrisome to anybody? If we could just do something like this, this would be textbook perfect bull move here. Ebbs and flows of the market. We don't want to move like this, right? The more unsustainable rocket lift we have, the shorter this cycle is going to be, right? If you want to get our Bitcoin values at 150 to 200K in Q4 or Q1 of next year, we can't be getting too crazy, right? We don't want to do that. We want to do this. This is the ideal path. Something more or less, right? Obviously not indicating exact numbers here, but something like this is what we would really want to do. July be at all-time highs, picture perfect for a end of 2025, start of 2026, kind of a more of a mania phase. This would be that path. Anything else, right? Could we just nuke down here and do this? Sure. But guess what? We're gonna have to do it first, right? You don't want to anticipate it. Get the candle closes. We're down a whopping 1.9% today, folks. Now's not the time to be panicking. So we close this 3-day candle. We're not even down that much, right? This 3-day candle is only down 1.9. Today we're down a third of 1%, and I feel like the sentiment's already changing. It's wild times. So keep in mind the facts in the chart, right? We're here. We're still above the damn gray zone. You're not allowed to be bearish yet. Bearish? Okay. If we start to close under 90K again, we can start to at least entertain the idea, but let's just look at where we are and what we've done over the past couple of weeks. Like, we were at 74K less than a month ago. All right, we're at 94K. If I would have told you back in April 7th that just wait, within 3 to 4 weeks we'll be knocking on the door of 100K again, you would have thought I'm batshit crazy. But yet here we go. Right? Just perspective is everything. Right? If you want to find the bears, you'll be able to find them anything. Right? If you want to find negative news, it's real easy. Right? But just looking at the facts, this is the facts. I would love to see something like this. Let's calm down either hold the EMA 8 around 91, 92, or the 21 on the 3-day chart around 90K. It'd still keep us above these highs, right? That's the important context. These highs, that's why the start of the yellow zone is there. And why also I would have put more emphasis on the 3-day chart over any other thing, really, is because we have a double bottom confirmed here, right? See this low and this low, right? We've talked about this several times. We confirm this as a double bottom, which would solidify this as being the lows for the rest of the cycle. And this is why this is a red zone, because if we invalidate that, very likely bear market based on structural setup here. So we should, in all actuality, not go back below 88K. So this is why we would start to get a little bit worried, but only below 88K. Not at 94K, 93, 92, 91, 90, not even 89. Under 88K is this start to worry zone. And it's just the start, right? You can get a little bit more worried if you start close under 80K. And then, right, SOL down here, okay? Bears got us. But until then, look, we're much closer to the bull side of the fence right here, right? Here's bull property up here. Full bull. We should paint this like chartreuse or neon orange, whatever your favorite color is, goes up in this area. All right, we're much closer to that than that, right? Context, perspective, keep it in check. All right, let's go out to the weekly. I mean, look how great this looks. Like, same path. That looks even a little extreme, doesn't it? Maybe we drag that out a little bit more, right? We need to keep that also in relative check. It looked okay on the 3-day, but that looks pretty quick. So something along that path, but maybe a little bit longer. I would much prefer. But here's July, right? Midsummer right here. If we can even be knocking on the door of, 105 by July, I don't know why you'd be unhappy with that. But, okay, from the weekly perspective, the weekly candle didn't really close bullish or bearish. It's kind of just indecisive, as you would expect if you study any kind of charts going into a major previous consolidation zone. Look how long we tried to hold this. Came back into the EMA 8, closed under it. We're trying to hold the line, and then we lose it, right? We closed multiple candles, really 3 weeks in a row under that EMA 8. You're losing your edge. We haven't closed under the EMA 8, right? That's our new line in the sand again. That's way the hell down, right under our gray zone, coincidentally. Gets us under these low wicks. Look at all these low wicks back here. I would expect a retest of the EMA 8 sooner than later. And honestly, we need it. We made this quick move from our red zone catastrophe potential, bounce off the 50 EMA as we did last time, right? Same thing we did last time, bounce off the 50 EMA, came back up, and look at this. This is what we want to do. And so far, we're rhyming exactly. We bounce off the 50 EMA, get a major move up, come back down, hold the 21, rinse and repeat, hold the 21, EMA 8, right? Do that. This is what we want to rhyme with, okay? A similar move like that would just do wonders. Let's see if I can grab this here. So that same path. Let's see what that would look like. I mean, look at it, almost goes right to the wick. I didn't change any of that, right? Look at the move back down. A perfect rhyme goes right to the bottom of our gray zone, right to the EMA 8, continues on up. Does this path look familiar? Right? It's what we just had on there. But painted from back there in a real, actual move. Just copy paste. If you want to do that yourself, if you ever want to, if you're interested, like how the hell did I do that? You just hold down Control on your keyboard and you can just, copy it right over. Right? It works every time. As long as you hit down the right button. All right. Okay, so that's the weekly. Hopefully that should be a little exciting. I don't know how that's not exciting to you, but if we're rhyming exactly move for move so far, then we would expect a move back down to around 90K and then another bounce to probably knock on the door of 100. Any back in the high 90s, and then a move probably back down to the EMA 8 again when it's up in this area, and then another move from July to new all-time highs. If we're going to rhyme with that, and maybe hopefully this, right? That's what we're expecting. So as of now, I would expect a move down. That has been expected. And we talked about that last week in all our videos. Like, it's not likely we're just going to break through here. It would have been really bullish if we did, but also starting to get unhealthy if we did that, right? So this is perfectly normal, healthy for the bulls. Take a chill week, reload, refuel, go down to 90. Maybe we spend another week down there, put another doji candle, and then off to the races, right? Spinning top, those are neither bullish nor bearish, just like this. But the context of where you're closing these does have some kind of weight, right? We closed under the EMA 8 back here 3 times in a row. That's your ice is cracking there. We're well above the EMA 8 here, folks, right? This is much different. Consolidating 5% above the EMA 8 on the weekly after just doing a 30% move into a major resistance zone is absolutely normal and expected. All right, going to the monthly. I have a long ways to go. But our monthly candle closed bullish above this low close. That's what we wanted. For May, I mean, look, nothing. We have no downside yet, right? We're waiting for this to imagine a wick down here. I mean, look how long these wicks are, right? Look at the volatility in every month. Did you really think we were just going to keep melting up? That would have been probably catastrophe in the next couple of months. We were looking at a July top, probably indefinitely. And not that we couldn't still do that, but I would much rather come down and refuel at like maybe even the EMA 8 on the monthly, which is just right around that top of the yellow zone there, 88K. Keep that in perspective here. Unlikely we're going to close like this. Look at the volatility of the price action, right? We've got to probably go down a little bit first. And maybe up a little bit more too. But either way, doesn't matter. I expect a mini version of this perhaps. Right at resistance, go down, tap on the EMA 8, maybe somewhere close to it, come back and close maybe right in our gray zone. And then, June, liftoff. Right, that would be a good recipe, right? That would be a good path to take. All right, we can briefly visit the 3-month that we closed this in July, right? We closed this one in July, right? We could easily be printing another tall candle body in the next 2 months. We have 2 months until we close this guy, right? But a good start. All right, so we go back into the daily and leave us off to recap here. Consolidation down to mid to low 90s, perhaps even a retest even lower, right? If we start to close under the 14, this is the odds-on favorite. If we close under there, we're probably in here for a couple of weeks minimum, and we're probably going to go test I would guess that 200, right? It wouldn't be shocking if we did this, right? This kind of come up and rise. We'd have our moving averages start to fall over here, right? Price action does one of these numbers, then kind of slow and behold, right? It kind of rounds out and goes back the other way, right? This would be pretty typical, and this would be that low wick on the monthly, on the weekly retest of the breakout right here, right? Not surprising, but right, if we could easily also just hold this 21 and kind of go back to highs, right, and do that number, that would still be okay. But I'm okay with either scenario as long as we're not closing inside of this yellow zone. I'm leaning bullish, and you should too, based on the facts in the chart, not what anyone else is saying. And remember, like any analyst that's leaning on indicators is doing themselves and you an injustice. Get off of indicators. They're lagging behind price. This is going to print the signal before an indicator, right? It's cool to back up your theories with indicators, but a lot of pro traders don't even use indicators, or 1 or 2, not 78. It's okay to look at them, but like putting your entire thesis based on a MACD is idiotic. All right. I'll get off my soapbox now, and we'll obviously keep you updated every day this week, and we'll take it a step at a time. Anything else? Obviously, if Bitcoin's going to consolidate, altcoins are probably going to get dragged down a bit, just because, really primarily because Bitcoin dominance is so high, right? The money's still it's not leaving Bitcoin. And what's it going to take? Like we've talked about this too, right? It's probably going to take a move back near all-time highs to give confidence back to the market that, okay, Bitcoin is actually not going into a bear cycle, and we're going to go back to all-time highs. I kind of want to make more profit than what Bitcoin's going to do. Maybe I should take out some of my Bitcoin profit and put it into altcoins, right? That's what it's going to take to get dominance down. We're going to have confidence market wide that the cycle's not over. And to me, that says, you know, triple digits up here again. We got to get the 6 figures back. 1,100 or higher. All right, I'll wrap it up there. Questions, let me know. Was I off camera the entire time again? My bad. I think my screens have shifted. Ghosts in the machine, huh?